I'm Steve Skancke, Chief Economic Advisor at Keel Point, and I'm pleased to share our thoughts about the impact of the U.S. and Israel military conflict with Iran on the U.S. economy and financial markets. Iran's response to the initial strikes by the U.S. and Israel has widened throughout the Arab Gulf and closed the Straits of Hormuz to shipment of Gulf-based oil and natural gas. As a result, global oil and natural gas prices have risen over 50%. U.S. natural gas prices have remained relatively steady, but U.S. gasoline prices are up 15% to an average price of $3.45 as this week starts and are likely to go higher. The duration and scale of the conflict are critical for gauging the impact on the U.S. economy and financial markets. As of this moment, the U.S. is mostly in control of the conflict's duration, and Iran has most control over its spread. The initial U.S. and Israel strikes in Iran appear to have achieved significant success, and Iran has been sufficiently weakened so as to mitigate its capabilities to export instability in the Middle East as it did in the past. If the conflict ends in the next week or so and the Strait of Hormuz reopens, the U.S. objectives will have been largely achieved, and the impact on the global economy and financial markets will have been minimal. Iran's leadership is in turmoil, and which factions finally end up in control will be critical to ending the conflict. Last week's Iranian conciliatory tone toward its neighbors in the Gulf region were encouraging, but weekend news of Iran naming Mojtaba Khamenei as its new supreme leader are not. And this sent oil prices to just below $120 a barrel earlier this morning before settling back to closer to $100 a barrel at 8 a.m. this morning. Mojtaba Khamenei is the son of the former supreme leader of Iran and viewed by many as more of a hardliner, which markets believe may signal a longer period of conflict. President Trump's demand for unconditional surrender could also change quickly if the U.S. assured that Iran is interested in re-entering the global community in a cooperative manner and not reverting to its prior efforts to destabilize the region or target Western interests. If so, the end of the conflict would represent an improvement from the prior situation. The impact on the U.S. economy and financial markets is significantly less than it is in other countries. And U.S. markets have weathered it well, at least until last Friday, when a surprising February jobs report showed 92,000 lost jobs in February. With U.S. unemployment still below 5% and the economy showing signs of growing at a better than 2% rate, the U.S. economy is fundamentally in good condition. When the conflict is over, inflation will resume declining, and the economy, jobs, and corporate earnings will continue growing. A well-constructed, diversified investment portfolio should continue to perform well as we move through this conflict and come out with a result that represents a return to stability. If any investor has questions about their own portfolios, our Keel Point team would be happy to address them. If you would like additional information, please contact your advisor or any member of our Keel Point team.